Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin. The secondary scare has begun. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We have talked about this likely outcome for a while now, and so I thought it would be prudent to provide a general update, considering that it seems to be in fact playing out. Now, I will say that making this video at this point in the week could be considered somewhat premature. The reason for that is because there's always a possibility that Bitcoin rallies back up to close the week above the 20-week SMA. However, what's life without a little bit of risk? We have talked about this likely outcome for a long time, and because of how aggressive the moves to the downside has been, I think there is a high probability, as the title of the video says, that the secondary scare has begun. And I really want to unpack what I'm referring to when I talk about the secondary scare and sort of go back to prior things that we talked about on this channel over the last couple of years or so. Okay? So the idea behind the secondary scare in crypto comes from the fact that the S&P 500 tends to get a correction in August or September of its pre-election year. So if you were to look at 2023, you can see that the S&P is in fact getting this correction that we talked about. Compare it to 2019, you can see there was a correction around the same time. Compare it to 2015, sorry, that's 2016. Compare it to 2015, you can see there was a pretty large drop-off. And 2011, there was a pretty large drop-off. And what's interesting is if you just simply look at 2023 and add the average of all prior pre-election years, you can see that this does tend to be a risk-off time for risk assets in general. And if it's going to come all the way back down to these levels, then it's possible that the S&P continues to fall. Now, what's fascinating, and we must remember this is something that I realized the hard way in 2019, is that you could reach a scenario, and there's no guarantees, right? But you could reach a theoretical scenario. Let me go over to the S&P 500, where you get a bounce by the S&P off the bull market support band whenever it gets there. Okay. Now, there's a lot to unpack here, so I want to remind you of the things we've talked about. So with Bitcoin, back over here in June, what did we say? We said that if Bitcoin bounces off the 20-week, then it will likely lead to Total 3 rallying back up to the 20-week to get rejected by it, right? So again, if Bitcoin bounces off the 20-week, then Total 3, or the altcoin market, will likely rally back up to get rejected by its 20-week SMA, right? Now, hopefully you can see where I'm going with this, because this is what more or less happened in 2019 as well. And if you don't really know where I'm going with it, you should see it pretty clearly very soon, because the idea is, what if, as we go further down the risk curve, right? So Total 3 bounces back up to the 20-week to get rejected when Bitcoin bounces off of it. So what happens if we get a scenario where the S&P goes to the 20-week SMA and then eventually bounces off of it? Could that be Bitcoin itself going back up to the 20-week SMA maybe a month from now or something, only to theoretically get rejected by it, in the same way that altcoins did not too long before? Now, remember, in the pre-election year, the S&P does tend to get that seasonal correction. Go take a look at 2019. Look at 2019. You'll see that the S&P had a seasonal correction, right, around this July, August, September timeframe. We did go below the 20-week, but we still ended up rallying after it. And even though the S&P rallied, Bitcoin still went down in the second half of the pre-halving year, right? Like, you can see it pretty clearly here that while the S&P was rallying, even though it held and bounced, Bitcoin still went down. Why did Bitcoin go down? Because Bitcoin is further up the risk curve. And so if the S&P simply corrects to the 20-week, Bitcoin has already given it up, right? Bitcoin already gave up the 20-week long ago, if and when the S&P gets to its own 20-week. I mean, the S&P still needs to drop at least a little bit here to get back to the 20-week moving average. But Bitcoin's already below its 20-week moving average, even though the S&P hasn't even gotten to it. So you run into a scenario where even if Bitcoin, or even if the S&P bounces here, which it might not, right? But even if it does, it might only lead to Bitcoin back testing its own 20-week moving average because it already lost support and it's entered into a downtrend. Now, when we talk about the secondary scare, let's unpack what we mean and what have historical corrections look like in the secondary scare. And when we talk about this, I'm not going to measure it from the highs of the pre-halving year. We're only going to measure the drop from the weekly close or the weekly open that started just above the 20-week that led us to going below it, okay? So here in 2019, once the secondary scare got underway, once we got below the 20-week moving average, right, or the weekly candle that led us below it, Bitcoin dropped another 61%. Okay? And if you're going to sit there and hold your hand up and say, well, this was a black swan, again, inverted yield curve in 1 year, recession in the next. That's all I care about. I don't really care what black swan you want to call it, though if we get a future recession, they'll call it a black swan too. 61% correction. This one, 2015, from where we fell below it, not where was the peak and where did it go below, just from where we fell below it. You can see that it was basically right around here, and it was about a 39% drop. And then in 2011, I need to address something here because someone in the comment section I saw said, well, why are you measuring it from here? This isn't the pre-halving year. That's near the peak. Guys, in 2011, we had a major top here in the pre-halving year, right? And then it dropped. And then once we got to the 20-week, right, the weekly candle here that ended up closing below it, you had an 82.5% drop before we actually finally bottomed out in the secondary scare, or in this case, it was more or less just the only scare because Bitcoin is still pretty new. But in all three cases, in the pre-halving year, the S&P dropped in Q3 of the pre-election year, knocked Bitcoin off the 20-week SMA in Q3 of the pre-halving year, and then Bitcoin entered into a downtrend for a while. And we have three examples, one where we went down about 80%, one where we went down about 40%, and one where we went down about 60%. So 40, 60, 80. So if Bitcoin were to drop, and it wasn't in that order, right? It wasn't like 80, then 60, then 40. It was 80, then 40, then 60, right? So you can't even say that it was, diminishing losses in that sense because this one was actually less than the one we got in 2019. Also, though, the move in 2019 was more impressive than the move in 2015, and so that could be one of the reasons why it dropped a lot more. But just to give you an idea of what that would mean. So if it's a 40% drop from where this candle opened, 40% drop puts Bitcoin at 17.5. Okay? That would be the lowest. This would basically correspond to this 2015 move. That would put Bitcoin at 17.5. A 61% drop, which is what we experienced in 2019, would put it at around 11.4K. An 80% drop would put it much lower, which I will say I don't think it's going to go nearly that low. All right? I don't really think that that's in the cards. Look, anything's possible, but I don't think that's a likely scenario. Right? I don't think that's a likely scenario. So if you followed this channel for a long time, you'll remember that in the summer of 22, when most people were screaming that the bottom was in, and now they take credit for calling the bottom because they called the bottom here, and then they just kept calling the bottom until they were right? They said the bottom was here, and I said no. Everyone thinks the bottom always comes in the summer of the bear market year, and it doesn't, right? People made the same mistake here, including myself back in 2018, and then the floor fell out. And then what happens is in the pre-halving year, you wreck the bulls and the bears. You wreck both sides so that both sides get sufficiently wrecked, right? You spend half the year going up, half the year going down, more or less. And what happens is that everyone gets drawn back in only for a secondary scare to occur that sort of shakes people out before the halving year and theoretically before the return to QE. and before a new business cycle, right? That's what typically happens. Now, when we were here last summer, I said June is not the bottom. I was very clear about that. I said I don't think June is the bottom. What I said, though, I said either the next bottom is the bottom or it could be the one after that. That's what I said. Either the next bottom in Q4 or the one after that. Now, we have to understand, like, well, why would it be the one after that? Okay, why do we even need to consider that a possibility? First of all, as an investor, you should consider all possibilities. So if someone says like something can't happen, it's impossible, then that's likely not a good way to think, because the markets will humble everyone. I mean, they will humble everyone. They humble myself quite frequently. There's only, maybe sometimes I get a few things right in a row, but then it's only a matter of time before I get something very much wrong, and then I fall out of favor for several months again. So do consider that, right? But the reason why we should be open-minded is because there's no way to know how deep the hole is in the secondary scare. There's no way to know, right? Now, you might think you know, but no one knows. It's possible that it's a pretty shallow second scare. It's possible that it's really deep. In 2020, it was a higher low. Okay? It was a higher low. We had a low, and then we had a higher low. But in the cycle before, which many people don't remember because many people weren't even in crypto then, it was not a higher low. It was a double bottom. And on some exchanges, not all, but on some exchanges, it was a lower low, which people conveniently decide not to talk about. This wick here, this low, 166.45. You can see it right here, like at the top, right? So see this L? That tells you what the low was when I hold it over the candle. 166.45. The low over here in August, 162. So technically it was a lower low, but I think to be to be a little bit realistic, let's just call it a double bottom, because there were some exchanges where it was a higher low, there were some exchanges where it was a lower low. Let's just call it a double bottom. So in one cycle, you have a double bottom. In another cycle, you have a higher low. And so the reason why I said back over here that either this is the bottom or the next one is because I can't be sure how deep the secondary scare goes, right? I don't know. I just simply, I cannot know that information. I can think that I know that a secondary scare will occur, right? Which is no guarantees, but I can't possibly know how deep it could go, right? I simply cannot know. And so we just have to simply wait and see how, the yield curve stuff plays out. Normally, you would expect, at least a recession or a recession scare following an inversion of the yield curve, which we haven't even reached. But again, there's just simply no way to know how deep it could go. So I think what makes the most sense is to be open to all three possibilities. Be open to the idea of a higher low, be open to the idea of a double bottom, and be open to the idea of a lower low. If you go into it thinking you know what has to happen, then you could be very wrong. And you need to have a plan no matter what. You need to have a plan no matter what. At this point, right, we're still pretty early on. And if you look actually in 2019, what happened after Bitcoin got this 20% drop in a week, we kind of consolidated for a little bit and then rallied back up and got rejected by the 20-week SMA. Now, do you remember what we said earlier in the video? What happens if now we've moved further down the risk curve where the S&P rally gets a bounce off its 20-week SMA just around 4,300 or so, and it bounces in a few weeks? Right, that could lead to Bitcoin back testing the 20-week SMA, just like the altcoin market did, but you're further down the risk curve, okay? And then that could just keep going on. And then you'll also notice that in this cycle, after we got this rejection, we came down and put in a new low, a new local low. We then rallied into the recession, right? We rallied into the recession and then final capitulation. So, when we talk about this idea of a secondary scare, we must understand what causes it. And I've said before, I think it's this seasonal correction in the S&P 500, nothing more, nothing less. One of the things we've also mentioned many, many times is how in the pre-halving year, you typically get about half green and half red. Now, so far, we've had about 5 of the first 6 months be green. I've said there's a good chance that 5 of the last 6 months will be red, just like in 2019, just like in 2011. And 2015, it was seven green months and 5 red months, but most of the first half of that was red and not green. So far, we're still following 2011 and 2019 pretty closely in terms of the first half of the year being mostly green. Second half of the year could be mostly red. The average return of Bitcoin in July of its pre-halving year was approximately negative 4.74%. It ended up being negative 4.09%. And I said earlier, right, the average return of Bitcoin in August of the pre-halving year is negative 21.3% when you include all 3 prior pre-halving years. If you exclude 2011, which was negative 40%, almost negative 41%, which is reasonable, then it's more like a negative 11 or negative 12% drop based on the 2 prior averages. And right now it's sitting at negative 9%. So you can see that there is certainly some cyclical behavior here that we should consider. A lot of times, right, 2019, when you get, and 2011, right, when the first half of the year is mostly green, the second half of the year is mostly red. And that is how we wreck both the bulls and the bears in the pre-halving year, and everyone gets sufficiently wrecked. If you're to go look at the year-to-date ROI of Bitcoin, right, we followed this one quite closely. If you're to go look at the year-to-date ROI of Bitcoin of 2023 and compare this to the average of 2015 and 2019, you will notice that it's doing a lot of what it normally does, right? Like, this is not that dissimilar from what we've normally seen. We've talked about this for a long time. So the reason that both bulls and bears get wrecked, I think, in the pre-halving year is it essentially flushes everyone out, and it leads to less speculation. Then theoretically, maybe future rallies can mostly be spot driven as opposed to via leverage trading, because people just get washed out and they simply throw in the towel. So by the time we get a real rally that can take us to new all-time highs, no one really believes it, because everyone just keep getting wiped out every week because they just over leverage themselves, and Bitcoin punishes that. So the thing that I'm sure a lot of people are wondering, and I will go ahead and address it in this video, though I imagine I will be doing another video not too long in the distant future, or not too long in the future, on Bitcoin dominance, is, well, why is the Bitcoin dominance down, right? Why is it down? Well, 2 things. First of all, remember that TradingView's recently added over 10 billion to total 3, to the definition. So had they not done that, the dominance would actually be over 50% right now. However, there is some element of me rationalizing in that statement, because while that may be true, the altcoin market has not capitulated on their Bitcoin pairs in this Bitcoin drop. But here's the thing. A lot of times when Bitcoin drops very quickly, the dominance can go down / sideways for a little bit. It's only after you really start to get these weekly closes below the 20-week SMA where the altcoin dread really starts to set in. So before you judge the dominance theory because it's now back below 50%, just remember that oftentimes it takes getting those weekly closes below the 20-week SMA before altcoins really start to get hit on their Bitcoin pairs. One of the reasons is because there might be a lot of people out there that are just in the buy the dip crowd, right? There's a lot of people that are calling for new all-time highs this year in Bitcoin. They have been all year. Every time I say this, people are like, well, no one's calling for that. Just go on Twitter for a few minutes. There's like tons of people calling for it. There's this big buy the dip crowd. So they're conditioned to buy the dip because it tends to work out for, half of the pre-halving year. So the market, Bitcoin goes up long enough to give the bulls a false sense of security, right? Because they think that, buying the dip's always going to work. But what normally happens is Bitcoin goes down a lot further than they think it's going to, and it wipes them out before the real bull market begins that takes you to new all-time highs, okay? So I would be very careful with this. One of the reasons why you don't necessarily see the dominance going up just yet is because there could still be a lot of people that are hoping for a weekly close back above the 20-week SMA. If that occurs, then you could argue that the secondary scare hasn't really started yet, and therefore the title of this video could actually be somewhat premature. But as I said, I mean, you have to take on a little bit of risk, even when making video titles, and there's at least some reason to believe that this is the real beginning of the secondary scare, and that we should be prepared for, you know, potential much further downside over the next, like, you know, several months. Now, someone asked me, well, how long does it last? And that's a really great question. The issue is that there's not really a great answer because the time at which it takes significantly varies based on what we've historically seen. In 2019, from when it started, from when we got below the 20-week, it was not over for 24 weeks. 24 weeks. But in 2015, it was over in 2 weeks. Remember, though, those 2 weeks corresponded to a 50% drop. Well, from this level, it corresponded to a 50% drop, but it corresponded to a double bottom. And it only took place over the span of 2 weeks. In 2011, it spanned 12 weeks. So we have 3 examples: 2 weeks, 12 weeks, and 24 weeks. So I can't really give a great range here. I mean, what do I say? Okay, it either lasts half a month, between half a month and 6 months, right? I mean, that's not very helpful. But you can at least see there is at least a wide sample there, a wide range of what could theoretically happen. And I think the way you navigate it is based on the severity of the drop, right? Like if you get a massive windfall event like 2015, where, you know, Bitcoin drops 50% in the span of just a few weeks, then you can make a more compelling argument. If it's more like a 2019 where it's a slower bleed, then it could take a lot longer. So it really just depends on how quickly the market moves. Like I can't possibly tell you how long it's going to take. My suspicion is that the altcoin market likely bottoms out sometime in Q4 or Q1. That's what I would guess. I would say that the altcoin market could bottom out sometime in Q4 or Q1, where perhaps it does something like this, right? Where it, you know, spends a little bit more time in this range and then eventually capitulates down into a depression phase. Maybe early 2024. It could be late 2023, could be Q4, could be early Q1 before the halving, into a depression phase, bounces back out, and then we sort of start anew. You know what would be interesting is if you actually go and overlay, and we've talked about this a lot, right? If you overlay the NASDAQ, and I think this is a great comparison, and I know some people think it's not really a fair comparison, but again, you know, we followed it for over a year now, and it seems a little lame to stop talking about it now, especially considering that it keeps playing out. But if you just simply take a bar pattern, okay, from the NASDAQ top here all the way to the actual low. Okay, so what we're going to do is we're just going to copy that and we're going to put it over here on the total 3 chart. And maybe I should actually switch. So let me switch it to a well, maybe it'll work on a linear scale fine. So let's go back to a linear scale and see how it looks here. So this is what the linear scale looks like. So yeah, it's gonna be a little bit hard to actually sort of compare it because I doubt I'm looking at it over the same time period. But I mean, you can kind of see, right, like just how similar this move is. I mean, forget about it up here, but just look at this move here, right? From this low, right, low bounce, low double top, right, and then it goes down, right? You could imagine how this could, you know, somehow end up bottoming out in late 2023 or early 2024. I mean, look at the match here on this, right? Like bottom, double top, higher low, back tested 20-week SMA, fade, put in the final low, and then rally out of this into the halving, and then sort of slowly recover and then go on sort of a fresh move. Could happen, right? That could happen. So when it comes to altcoins and the people that are following the dominance, and you're wondering, why is the dominance down? First of all, only a few months ago, 49.77% dominance would have been seen as unreachable by many. Second of all, if they didn't change the definition to total 3, we'd still be above 50%. I know I'm rationalizing. Third of all, we're at the 100-day moving average. So the 100-day is actually around the spot that the dominance has found support on the last several, tests of it, right? It found support here at 41%, and then at 43, and then at 47. Maybe it'll find support again at 49 to 50. Even if it doesn't, we've seen this thing where Bitcoin dominance rallies and then kind of consolidates for a while, sometimes with a slightly bearish bias, and then rallies back up, right? We've seen that happen here again, and then here again, and then here again. So we still, in my opinion, need to see the point where altcoins go down on their Bitcoin pairs when Bitcoin USD goes down, right? The dominance theory is the fact that, or the idea that dominance goes up no matter the direction of Bitcoin USD. So if Bitcoin goes up, dominance goes up. Bitcoin goes down, dominance goes up, right? But we still need to get the weekly close below the 20-week moving average. Okay? So if that happens, right? If that happens, then the dread could start to set in for the altcoin market. Because at that point, if the buy the dip crowd gives up, then then that could be all that. Then there's a clear case to be made that the yearly highs are in, right? That the yearly highs are in for the year, and that the secondary scare has already begun. So we'll continue to follow this and see if it plays out. But hopefully these videos have been useful. I certainly do not get everything right. I get plenty of things wrong. So please do not assume that I'm going to get everything right just because I've gotten a couple of last few things right. Please be aware that I do not have a crystal ball. I do not know what's going to happen. I'm just sort of speculating dubiously about the direction of the market based on historical moves. And this is one of those things where I've seen this play out many times where Bitcoin gets this secondary scare that for some reason no one believes in. They call for new all-time highs in the pre-halving year, only to get wrecked, right? And then a lot of times what'll happen is you can see this playing out exactly like last cycle, right? Think about it with the altcoin market. What marked the bottom for alts? What marked the bottom? Was it Bitcoin's bottom? No. Bitcoin bottomed in 2018. Alts didn't bottom collectively until 2020. When did alts bottom? When the recession hit. When the unemployment rate started to go up. Why did alts bottom there? Because we started printing, right? You can overlay, again, net liquidity to total 3. Remember, altcoins need liquidity. That's what they need. If you follow this model, you can see that alts have been following it pretty closely. They are a function of excess liquidity, mostly. And so the reason why you could see alts bottoming out as we go into a recession is because upon a recession, there's a good chance that the Fed will pivot and start printing again. And if and when that happens, that's when higher risk assets like altcoins do well. A lot of people say, well, why are you so against altcoins? Altcoins can make you rich. Altcoins will make you rich. Well, altcoins can make you poor too if you buy the dip all the way down, because a lot of them will never go back to their all-time highs, not even close. So the way you help preserve your capital is you ignore altcoins for a couple of years after Bitcoin's peak. Sure, you're going to miss out on some rallies, but you're also going to preserve your capital, and you're not just going to you're going to be much better off for the most part if you can pick out the few that do well. Then congratulations, but a lot of the times even those that do well they get faded pretty hard. Last cycle Cardano rallied 5x off its low and then went on to put in a new low, right? Same thing could happen for Solana this cycle. It could go put in a new low. I didn't believe it was going to happen in 2019 with ADA, and it did. So don't tell me it can't happen. Again, I don't make the rules, but I do enforce them. And I'm telling you, the altcoin market is a function of excess liquidity and net liquidity. And liquidity is still going down. So over here, altcoins bottomed into the recession. But why did they bottom there? Look at what happened with net liquidity. It started skyrocketing again. So the altcoin market capitulated into the recession in early 2020, just at the worst time. So I've been saying the same thing for, over a year and a half. And there are going to be some people that are going to capitulate their altcoins likely into a recession because they're going to be like, all right, they give up. They have to sell their altcoins. The recession is here. But when the recession is acknowledged, that's when liquidity comes back because they got to print, right? And the reason they'll print is because a recession can bring inflation down quickly. So if inflation comes back down to their target of 2% and a lot of companies are going bankrupt, then what do? The only thing they know how to do, just print more money. And that's where these riskier assets will start to do well again. And you might say, well, Ben, I mean, what about this recession? Guys, I've said for a long time we are not in a recession. Throughout all of 2022, I said, nope, not a recession. Through 2023 so far, I said, nope, not a recession. Doesn't mean one's not coming. And remember, if you were to go take a look at ROI to low after yield curve inversion, after the 3-month and 10-year, after you invert the 3-month and 10-year yields, right? It's pretty common to rally into a recession, right? I mean, like, look at 2020. So this is this cycle right here. Look at this was the 2019. We rallied into a recession. 2006, 2009, we rallied into a recession. .com, we rallied a little bit and then we just went down. 1989, we rallied into a recession. Are things really that different? Look at so ROI to low after yield curve inversion. Go to metrics. This is an interesting one. So I was going to make a full video. I'll make a dedicated video on this at some point. But look at this: initial claims after the inversion of the 3-month and 10-year. Let's just go ahead and ignore the pandemic spike, so we can actually compare. This is 2022. This green line here. This is the initial claims ROI to. Well, we don't really need to know the low, but just to the high. ROI after yield curve inversion of 3-month and the 10-year. It's right where it normally is, right? So yes, the labor market has been resilient, but it can often be resilient after a yield curve inversion. It can take several months before the onset of a recession. So yes, I mean, the business cycle is likely going to end with a recession. And if it doesn't end with a recession, it could still be a recession scare where people think it's going to be a recession. Either way, risk assets likely get sold off, okay? Now, there still does exist a scenario where the S&P could hold the line at the 20-week SMA and then rally in Q4 and then sell off again in Q1 or Q2 of next year, right? There's a chance that happens. So you have to be aware of that, and that's why we need to track initial claims. We need to track continued claims as closely as we can just to get a gauge on the labor market. But I will tell you one more thing. I think a lot of times people think that the stock market sells off when the unemployment rate goes up. But another way to think about it is that the unemployment rate can go up when the economy is sick, when the stock market goes down. So the yield curve right now, the Treasury yield curve, tells us the economy is sick. This is what it looks like before all the prior recessions in recent history, right? Yield curve inversion, all these different yield curve. I don't have enough data to go back and look at the 1980s, late 1980s before the 1990 recession. But yield curve inversion tells you the economy is sick. So when the stock market sells off, these companies, in order to help cut costs, they lay people off. And because they lay people off, a lot of people look at it and say the stock market drops because they lay people off. But you could argue that they lay people off because the stock market is dropping. That's the reason why the stock market bottoms before the unemployment rate peaks. If you don't believe me, go take a look at the unemployment rate overlaid with the S&P 500. You see where this peaked, the unemployment rate? S&P had already bottomed. See here where the unemployment rate peaked? S&P had already bottomed. Time and time again throughout history, the unemployment rate peaks after the S&P 500 bottoms. The S&P is forward-looking. So it should bottom out before the unemployment rate peaks. So you could argue that it's the market dropping which leads to the labor market softening up and not the other way around. As long as asset prices are going higher, a lot of these companies don't really have nearly as much incentive to lay people off, right? Everyone's just, enjoying these higher prices. But the minute we go to a risk-off environment, everything can change. And that's what we have to be careful about. One thing to remember in the business cycle, bonds tend to bottom before stocks. So just as a casual reminder, I mean, I'm not going to talk about it a lot because I don't think most people care about it. But things like TLT and whatnot, I would generally expect those things to bottom out before the stock market does. But I would also say that crypto can probably bottom out before the stocks as well, because crypto is further up the risk curve, and really all crypto needs is that liquidity. One last thing that might be worthwhile to talk about in the context of the secondary scare and when it actually might be over. It literally could be over on the first rate cut. And I've had this theory for a while that sometimes it's the last rate cut. But so last cycle, when you look at, if you look at where Bitcoin found its 2018 low, it occurred, at once we reached the terminal rate. And then the top in 2019 occurred on the first rate cut. And then the secondary scare found its low on the last rate cut. Okay? So pretty convenient, right? All three major moves in the Fed funds rate occurred. You can see that Bitcoin had a major inflection point, right? Once we hit the terminal rate, Bitcoin bottomed. Once we started cutting, Bitcoin topped. The last cut, Bitcoin bottomed. Look at this cycle. The Fed has been so far behind the curve. They waited so long. Bitcoin found this low, not at the terminal rate like last cycle, but it found this low when the Fed went from 75 to 50 basis point rate hikes. So you could argue the market is treating that as the pivot, that as the terminal rate so basically the argument is that we're just one step ahead. So, in this cycle, Bitcoin found this low at the terminal rate, which you could call where the Fed finally reached the level that it was going to go. Here, you could argue that it was at Bitcoin found this low when we shifted from 75 to 50 basis points. Then the argument goes that Bitcoin then tops, not where the Fed cuts, but once we hit the terminal rate. Now, if we've reached the terminal rate, which there's a good chance we have, and I said over a year ago that 5.5 could be the terminal rate. If this is the terminal rate and it just goes sideways for a bit, then we're going to look back at this and say, well, this is basically right at this top. So then, if we follow in kind, what could mark the next low for the secondary scare? It might just be on the first rate cut. Remember, we're in a period of high inflation. And so the market is going to be so starved for liquidity because the Fed has been so much more aggressive than they have been in the last 40 years that on the very first rate cut, that might be the bottom for Bitcoin. And it could be a higher low. It could be a lower low. It could be a double bottom. It all depends on how aggressive the Fed wants to be. And anyone that's going to tell you they know what's going to happen, I can assure you that they don't. Okay? And including myself, right? You need to be open to all three possibilities. I'm just saying, if we do get a double bottom or a lower low, I mean, it should not be that surprising. Or if it's a higher low, it should not be that surprising. You have to be open-minded to how the markets change and evolve as we continue to move forward in the business cycle and how the unemployment rate unfolds as we get further into the business cycle as well. So that's what you look for. I would say there is a chance that Bitcoin finds a low, whatever it's going to be, on the first rate cut, which coincidentally, I believe the market, as of right now, let me see if I can pull this up. So as of right now, the market is expecting the first rate cut in May of 2024. Right around the halving, right? But remember, this can change very quickly. I mean, if markets, look, the S&P is not going to, the Fed's not going to pivot with the S&P at like 4,400. If it's at 3,400 or 3,600, yeah, they could. So it could come sooner. So imagine they pivot, in early 2024. It would be very similar to what played out last cycle in terms of cutting here aggressively in early 2020. And then people sell their altcoins into a recession just as liquidity finally returns back to the Cryptoverse. It's a brutal cycle, and it does tend to play out in a very similar manner from one cycle to another. Yes, the dominance has taken a hit here, but I would say give the market some time to digest this, and we should see it start to head back up a lot. And I imagine we would see alt Bitcoin pairs sell off quite aggressively in that environment. If we get that weekly close below the 20-week moving average, right? So if Bitcoin gets that weekly close below the 20-week moving average, which I think it probably will, if not this week, then not too long from now, then you would likely see altcoins take a pretty big hit. And they could get hit before the weekly close as well. I mean, just spending some days down here could easily be enough to sort of flush altcoins out. But this is an interesting development, and volatility has returned to the cryptoverse. Hopefully these videos have been useful in helping you prepare for this likely outcome now that it does seem to be playing out. And I will try to do my best to continue to navigate this every step of the way. Thank you guys for tuning in. Make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Bye.